All right. Well, thank you for joining us today for our Controller's Corner session. My name is Lonnie, and I'm a business solutions consultant with CR Group, doing implementations, training, and helping users optimize their use of Dynamics GP. We have designed this series of free webinars to help Dynamics users really take their GP and reporting to the next level. And something we hear a lot from our clients is that they're managing their revenue recognition processes off ledger in Excel. So today's Controller's Corner session is devoted to showing some of the available revenue recognition functions that are available in GP. A few housekeeping items before we get started. Today's presentation will be recorded and will be available on demand later this week on Controller's Corner website on our CR Group site. Also, I encourage you to ask questions, so please submit them in the GoToWebinar panel, and I will do my best to get to them at the end of today's presentation. And finally, this session counts for 1 hour of your continuing professional development hours, and we will email you an individual certificate to all attendees this week. Note that this session has been scheduled sort of for 45 minutes to an hour, may take a little less time, but if there's questions at the end, then we may fill that time. In terms of the agenda today, we're first going to review the primary revenue recognition functions available in Dynamics GP. I'll then show you sort of a brief demo of a couple of these functions. Then finally, we're going to talk about the project accounting function in a little more detail and a comparative overview of its revenue options. So the first revenue recognition tool that's available in Dynamics GP is the Deferred Revenue Expense module, which is included with the purchase of the core modules in Dynamics GP. So once activated, the module requires very little to no configuration to get this function up and running. The primary use for Deferred Revenue Expense function is simply to record predominantly straight-line transactions into future periods without having to do multiple journaling off ledger. It posts everything basically in one lot. So again, managing it off ledger in Excel is no longer required because your future periods are already handled. To make the data entry side of it even faster, if your revenue is recognized the same way for the bulk of your sales, you can create what we refer to as deferral profiles that simply be applied to a transaction with one click of a button. Then your revenue recognized over that period of time. We're going to show you that in our demo today. The contract administration function is a individual function of a larger module referred to as field service in Dynamics GP. You don't necessarily need to be using all of the components of field service to use contract administration. However, as a result, contract administration will require additional configuration time to get it up and running, and it is a separate licensing module, so you'd have to look at costing on that side as well. Contract administration is predominantly used by organizations that have contracts that renew over a period of time, as it has an auto-renewal component built into it. In addition, it completely separates the billing function from the revenue recognition function. When a contract is set for renewal, it can be billed using its own billing engine within contract management that links to the sales order processing invoicing tool in GP. And then when the revenue is set to start, you basically run its own revenue recognition process, which is a simple click of a button. So both are incredibly easy, and again, we're going to show you a little bit of that in our demo today. So with that said, let's go ahead and take a look at what is in GP for these two options and how we use them. So the first one we're going to look at is deferred revenue. And I mentioned moments ago that we have the ability to set up what we refer to as deferral profiles. So in the setup function under financial is where you'll find the deferral setups. And I can click on deferral profiles, and here is where I'm going to set up my profile. So in this case, maybe I am providing annual support services to my customers, and I want to be able to invoice them for that support and recognize that support over a fixed straight line period of time. So I need to link it to a module, and I invoice out of sales order processing, and it's really impacting the sales side because on the sales side is where our deferred revenue account is attached. And I need to then tell the system what are the accounts that are driving this. So in the billing recognition is that when we're removing it from deferred, where should it go? So I need to put in my respective revenue account. On the deferral side, I need to indicate where my deferred revenue or unbilled revenue is going. So in this case, I have my unearned income. It's attached to sales order processing, and here's my basically credit entry when we're taking it out of deferred. And then I need to give it a calculation method. So the system has 3 predominant calculation methods. Days in a period, meaning that it takes the actual number of days in the month and calculates the revenue based on that, as opposed to an equal per period where it just takes the total invoice and divides it by 12, irregardless of how many days are actually in that month or period. And miscellaneous allows you to sort of calculate the number of days yourself or the number of periods specific to you. So if you actually want to calculate it based on a 15-day cycle in 1 month, you can do that as well. I'm going to choose equal per period because that is the most common one we see across our clients. The start date can be left blank. It is not mandatory to fill this in, but where this becomes really helpful is organizations that have renewals or memberships that occur at the same time every year. So for instance, I am a certified professional accountant. My dues are set to be paid by July 1st of every year, which means that the CPA organization is sending out an invoice ultimately with a start date of July 1 year over year, because that's when the revenue is ultimately going to be recognized as July 1 to June 30th. So in a case like that, I could ultimately specify a start date in my profile if all of my start dates are the same. If they're not, I can leave it blank, and I can set that up when I actually apply it to the invoice when we bill it. And then I want to say how many periods are we recognizing this over. So in this case, we're going to say it's an annual, and I'm going to put 12 in here. And ultimately, you can put however many periods are applicable in this case. So if you do have a straight line recognition that is done over 6 months or 9 months, you can also create profiles with those number of periods as needed. So once I create my profile, I can now save it, and it's now available for me to use as part of the sales order process in terms of recognizing my revenue across that straight line. So now what I'm going to do is I'm going to pop over to the sales side, and I'm going to show you how we do that. So I'm going to open up sales transaction entry, and in here I have created an invoice that I'm going to pull up here for you. So here's my invoice. I am sending out to my client for support services. The cost is $12,000 for the year. And I want to be able to defer that $12,000 in terms of revenue, because right now I can't recognize all of it. I have to recognize it as it's earned on a monthly basis. So at the go-to, I'm going to head over to the distributions. And the trigger account that we set up on our profile is this sales type, and it is my deferred revenue account. So here's that unearned revenue account I applied to the profile. And now I can simply go to additional, and I can say, I want to select a deferral profile for this. So I'm going to pick this up, and I'm going to select my support profile. And now what you're going to see is my start date picks up today's date. I can simply change that if I want and say the revenue is actually going to start in May. And from there, the system calculates an amount that's being recognized each month, and the posting date being the first of each month for 12 consecutive months. Okay. Now, with this, maybe my fiscal year for 2018 is not open yet. That is okay. If your period, as long as the fiscal year is open, your periods do not have to be open in order to post them to those future periods. So that's a great thing, because you don't have to worry about people then posting into those subsequent periods. If they're open, you can still keep them closed. And the only thing that's permitted to be posted into those future periods is your deferral entries. So once I do that, I've allocated. I can now go back to my sales transaction invoice, and I can continue with going ahead and posting this invoice. And all of those transactions are going to be posted as part of the invoice posting to my GL. So I'm going to go to my sales batches, and I'm going to pick up that batch, and we're going to post it. And there's my sales posting journal, but the one I really want to look at is this one. So this is my general journal posting. This is for the actual GL entries that are being impacted. So the first entry is going to include deferred revenue for all of my $12,000 and an AR invoice or an AR account and taxes, etc. But subsequent to that, my subsequent periods are going to show me a removal from deferred, so a debit of my deferred revenue or unearned income account, and a credit to my revenue accounts. So that's how the system ultimately processes those in terms of the deferral module. Okay, so this is the general journal for the sale only, and then subsequent I will see my general journals for my deferred entries. So that's sort of the deferral side on the revenue end. Deferrals are also available on the expense side. So here we go. So here's my report, May, June, July, et cetera, et cetera. So all my postings for the subsequent periods, ultimately debiting my unearned income and crediting the respective revenue account that we associated to that deferral profile. So the deferral module also applies to expenses. So this function can actually be used on the AP side to manage your prepaids. A lot of companies use prepaids, whether it's 12 months of subscriptions or memberships or simply prepaid expenses for conferences and trade shows that aren't being incurred until that actual event happens. So this function is also available on that side as well and can be used to defer your prepaids and expense them over a future period of time. So that's sort of the deferral module in a nutshell. As mentioned, there is very little to no configuration really required on the deferral side. It is part of your core licensing, so odds are if you're not using it now, you do have the ability to use this, and the cost would be really minimal to set up. And you can see the benefits could be hugely beneficial if you're managing a lot of those revenue recognition processes for straight line revenue rec in Excel and doing separate entries on a monthly basis to manage those. So the next function we sort of talked about in the slideshow is contract administration. And contract administration is found in the field service module of GP. So many of you may not have this tool already. It is a separate module with a separate costing component with Dynamics GP, and you'll see it has a large component, a large set of functions to it, service calls, preventative maintenance. And so a lot of companies that use this tend to be companies that are dealing with serviceable equipment, machinery, things like printer companies. But the contract administration tool can actually be used for various different things. We at CR Group actually use the contract administration side for auto-renewing some of our contracts at this end in terms of support. So it's actually a really interesting tool outside of field service, just the contract admin side. So in this case, I actually have a contract that I created, and entering a contract is very simple. We basically hit the new function and we enter the information as required for the customer, what the contract type is, and any descriptions associated to that. But what is really important to note about contract admin is the information on the left is related to the contract billing, the actual contract length, or the contract itself and revenue recognition in terms of how long is the contract, when does it start and end. And on the other side on the right, we talk about the billing side. So when is it going to be billed? How often is it going to be billed? And in this case, I've said that this contract is 12 months in length. However, we're going to bill them twice through the course of that 12 months. We're going to bill them at the initial contract date, and then we're going to bill them 6 months later. So in that case, I'm going to create another invoice for them, assuming that we are 6 months after the start date. Okay. In this case, we can also then determine what the liability type is, and that is basically the type of recognition, which in most cases is a straight line recognition over the contract period that we've specified. So when we enter this contract, we then enter what we refer to as contract lines, which is the actual services or items that we're providing them as part of the contract. So the contract could actually consist of more than one item in it. So in some cases where people are providing licensing as well as support, as well as maintenance, all of those items could be made up in a contract, in one contract, not separate contracts for each component, making it easier to manage the client's account in its entirety. And what we can see here is I have my start and end dates for my contract and my billing dates in terms of start and end, and how much money over the course of that are we talking about. So it gives us a monthly rate because in our case we are doing a straight line revenue rec, so we need to know how much money is being recognized monthly. But it also tells us what the extended price is for the entire contract, so in this case $12,000. And I could add multiple lines to this if I needed to. When we invoice out of contract administration, the system keeps track of the invoicing that we've done. So in this case, I have already invoiced them for one billing, which shows on April 30th, I billed them for their first 6 months of $6,000 and when it was posted. Okay, and it shows me the posted amounts. It also shows me subsequently that we have another invoice that's going to be due on October 30th, 6 months after the contract start date, which has not been posted yet. So we know we haven't actually run that process yet to complete the billing. And it shows us the totals down here. We're expecting to bill them $12,000. We've invoiced them 6 so far, and we have 6 remaining to be invoiced at this time. In addition to that, it also tracks the revenue side. So if I'm assuming at this time that I am in October, we're 6 months after the initial due date or initial billing date, I would see that I have recognized transactions in the system in terms of posted data. So it shows me what revenue I have tracked as posted and what revenue I have not yet recognized. So in this case, I'm still missing a period that I need to recognize at this time for October as my 6 months, and I also need to bill them in October for that 6 months of billing, that remaining $6,000. So we're going to show you how that's done in contract admin, and you're going to be absolutely amazed at how easy this is. So I'm going to go ahead and save this contract, and we're going to minimize this for now. And you're going to see there's a function in here called contract billing. So I'm going to click on that, and I'm going to click the date in which we are an end date for my billing. So we're going to assume we're October 31st. And I'm going to go ahead and select that date, and the system is going to show me all the invoices that are due to be billed either on October 31st or prior to that. And what you'll notice at the bottom is my lovely contract 2075 for $6,000. So at this time, I can click that contract, and I simply click invoice, and it's now going to create an invoice for me on the sales order processing side. It's going to give me an audit trail report that will show me that that contract or that invoice was created on the sales order processing side. So I can see here my contract was created. It's sitting in batch contracts, and here is the invoice number that was assigned to it. So if I were to go back to my sales order processing side, and pull up my contracts batch, I should see an invoice at the bottom for 3056, which is my $6,000 plus taxes being issued to Adam Park for our contract. So again, really simple and easy. Click of a button generates the invoice. I have the ability to check the invoice in the batch, make sure everything's good in terms of distributions and information before I send the invoice out to the client and post this in my batch. So that's the billing side. So amazing, quick billing. We were able to process it very fast, check it, send it to our client, and hopefully quickly get paid. Now on the revenue recognition side, we are October. We've only recognized 5 months worth of revenue at this time. So we need to recognize a 6 months. So if I go to the revenue recognition screen and I were to say, well, we're 2017 and we're period 10, I want to see what's happening here. And at the very bottom, I'm going to see a prepaid here, 2017 for Adam Park for $1,000 for period 10. So by simply clicking this and clicking post, it's now going to create a batch on the financial side of the system. So it's going to give me a confirmation on that. And here we go. So here's my $1,000 in revenue rec that is being recognized. And what it's doing is on the financial side, in the general batches, I will be able to see a batch that is labeled as liability. So right here. So liability reduction. And now, of course, as many of you know, when you look at batches in GP, it is actually giving you the absolute value. So in this case, this should be the correct entry because it's a $1,000 debit and a $1,000 credit. So when I pull this up, I can see my entries. Just pull up my arrow here. And there we go. So I am crediting my revenue account of $1,000 and removing it from my deferred revenue for $1,000. So again, a really quick and simple process in terms of revenue recognition, how you can easily get your revenue posted across. This is very easy. You can actually then even control the future postings on these. So if you want it on the revenue recognition side, you could actually go in and select the periods and recognize them in future periods for postings so that you don't actually have to go in month to month if you don't want to. So again, a really quick and easy way to track your revenue recognition within GP, auto-posting it through your GLs so that you're not having to create those journal entries manually and manage all of those balances in terms of information off ledger in Excel. So that sort of wraps up the demo side in terms of the deferral module as well as contract administration. So you'll find that there's similarities between them. The biggest difference between them in terms of functionality is the contract admin having an auto renew feature. It does allow you to create new contracts from an existing one very easily so that moving forward or rolling years are easy to accommodate for support services that maybe roll over or contracts that roll over multiple years as opposed to just one. So that can be managed on the contract admin side very easily, whereas the deferral doesn't necessarily have that. Once it's future posted for your 12 periods, that deferral profile is sort of ended for that particular invoice, and there isn't a way to auto-renew that. So you're having to enter that each time. Again, still an easy process, so you're not necessarily doing a lot of laborious work, but that's the main difference between them in terms of limited keystrokes and having to manage that process manually. Sort of last but not least, in terms of revenue recognition, is Dynamics GP's project accounting function. This is a separate module that is purchased outside in addition to your core financial components. Project accounting consists of various revenue recognition options, and they're based on the type of projects your organization may be engaged in. So in this case, the system has three sort of project types: time and materials, basically saying we recognize revenue as time and expenses are incurred; cost plus, or a fixed price. So those are the three options that are available within GP. And the main benefit is that if your business fits into one or more of the available options, it allows for a very easy automated revenue recognition process. So the table here shows sort of the outline of the different revenue recognition options available in Dynamics GP project accounting and what they're typically used for. So CRG actually does use project accounting. As a professional services firm, we do use this module to help us keep track of time and expenses utilized for project work with our clients, as well as recognize revenue for fixed price contracts. So it's important to note, though, that the project accounting module is a very large and complex module. It does generally require some in-depth analysis and requirements review prior to configuration. And usually we follow that requirements review with a proof of concept prior to deployment because it is really important to ensure that it's set up correctly with the correct accounts, the correct cost categories, the budgeting components. There's a lot of pieces that make up project accounting, so it's not for the faint of heart. So if your company has a need for direct cost reporting on a per project basis, and you think that this may be a solution for you, we would certainly encourage you to reach out to our team, and we can schedule some time for detailed requirements discussions with you and your stakeholders to determine if project accounting is ultimately a good fit for you, and then sort of proceed understanding how we would configure it for you specifically. So again, very detailed module, so we don't obviously want to just sort of branch this out to everyone because it isn't necessarily for everyone. But what you can see here in the table is the revenue recognition methods available. So there are sort of 6 predominant revenue recognition components, and 2 of them are for time and materials projects. So a when performed is basically when you post a cost transaction for the project, whether it's labor or expenses. Cost of goods sold account is updated on your profit and loss statement, as well as your revenue and those respective expenses. So as the work is being done, revenue is being recognized. There's also the when billed function. So the revenue is really only recognized when a billing invoice is posted for the project. So again, cost of goods sold is updated, but we use a work in progress account on your balance sheet to keep track of that unbilled revenue. As work is being performed and as it's billed, it removes it from there and basically shifts it into your revenue accounts. So that's sort of the when billed. The other 4 revenue recognition policies are built on the project types of cost plus or fixed price. So cost to cost is basically a percentage of completion method based on a forecasted dollar amount to actual dollars. So meaning if you've budgeted for $10,000 to be basically incurred for that project, as you incur your expenses, if you have $5,000 expended to the project, it's going to recognize 50% of the revenue under that premise. So one thing to note about that is that even if the project isn't actually 50% done, it doesn't necessarily take into account cost overruns. So if that $5,000 you've entered in there actually only reflects 40% of the project being completed, you would have to manually adjust that revenue out through the revenue recognition tool in project accounting. The effort expended option basically is the same thing as cost to cost, with the exception that it's not looking at the dollar values, but rather the quantities. So in this case, the percentage of completion is based on quantity of hours or quantity of values. So if you have 100 hours as part of your labor component to be completed, and again, you've got 50 hours expended, it's going to recognize 50% of the revenue, assuming that you're 50% done in terms of effort required to complete the project. The complete revenue recognition method is actually based on the status of the project. So every project has its own status, and once you change that status to completed for all the projects in a contract, it will recognize all the revenue across. So again, most of this is going to sit in some sort of WIP account until it can be closed, in which case then it would be moved into a revenue recognition component in your balance sheet. And then we have your effort expended labor only. So the major difference here is that effort expended above can be tied to labor as well as expenses. So if you have contractors that are participating in this process, it could include expenses as travel, meals, contractor expenses, etc. Whereas effort expended labor only actually only ties the quantities as it relates to timesheets. So actual people who are working in your organization completing a timesheet, it will only recognize revenue based on the labor component of the project as a whole. So those are the 6 that are available within project accounting. There are still tools in project accounting that allow you to adjust revenue manually through the revenue recognition platform. So the idea is that your revenue recognition policy should sort of fit within one of these or various of these components, because you could have different types of projects that have different revenue recognition policies. But ultimately, if they fit within these parameters, project accounting could potentially be a good fit for you. Not to say that we don't always, that we can't always rely on automated revenue rec, but sometimes when there's cost overruns and other considerations that come into play, there is the ability to still manually override the revenue recognition and project accounting if necessary. So don't fret if you do find yourself in a situation where, your world is not perfect and all of these things fall into place the way they should. You're not outside the norm. That's most businesses. So you may find yourself having to manually sort of adjust your revenue as needed. And that is a available option. That is a function that is in project accounting. So it doesn't necessarily mean you can't use it. It just means there is still some considerations that have to be considered in terms of validating your revenue recognition. So that is the more complex revenue recognition tool that is available in GP. And as I said, we would really recommend that if this is an option you're exploring, that you reach out to our team or Angela and talk about your needs there, and we would coordinate sort of a detailed requirements analysis to really understand, do you actually need project accounting, or is there other tools that could fit your needs? And if you do need project accounting, then we'll look at sort of those detailed requirements and understand how it needs to be configured for your use, and if it is in fact going to be an ideal fit for your organization. So now I'm going to actually open it up to questions in here, and I'm just going to see if there's any questions from the panel in here in terms of our revenue recognition and what we've done today. So I have a question as it relates to contract admin for the auto renewals. So the question is whether auto renewals sort of create the new contract automatically or if you have to prompt it. So you actually have two options in contract admin. There is an auto renew checkbox that allows you to basically run a utility to automatically renew your contracts, and it creates a new contract number, or you can use the existing one if you want to. Or if you want to renew them yourself, you do have the ability to sort of do the data entry on that side if you want to. But again, to eliminate keystrokes and make it more efficient, if you do know contracts are auto-renewing over, a multi-year contract, the auto-renew function is a nice, quick, easy way to run that routine and get your contracts in the system. Question about deferral profiles. So when you create a profile, when you create a deferral, do you have to use a profile? No, you don't. So you can actually create deferrals on the fly. So if you've entered an invoice on the expense side as an example, and it's for a trade show or conference, you know that that expense is actually going to be incurred when that conference is attended. So you may just on the fly set it up for one single period to be recognized when the conference date is set and expense it in that period. So you do not have to create profiles in order to use deferrals. It just helps minimize the number of keystrokes required when using it. So it's a great tool, great functionality, and allows you to do things on the fly or set them up based on your business's sort of parameters. So those are all the questions I have currently in the webinar panel. So if you do have other questions subsequent to today's session, please feel free to send those along. We're more than happy to provide any additional information you may have as it relates to these revenue recognition tools and how we might be able to help you get started with them when the time comes. So with that said, here are some of the add-ons for Dynamics GP. Please take a look at our site and see what great services we have to offer here at CR Group. I'd like to thank everyone for joining us today. I hope that you found this helpful in understanding some of the tools available in GP to allow you to take sort of your revenue recognition calculations out of Excel and directly into your ERP. A reminder, you will receive a certificate this week for your professional credit hours. And if you haven't already, please be sure to check out other upcoming Controllers Corner sessions on our website at crgroup.com/controllers-corner. Finally, there will be a survey that should appear after the webinar, so please take a moment to provide your feedback so we can work to keep on improving these sessions moving forward. And so thank you again, everyone, for taking the time to chat with me today about revenue recognition. Please let us know if there's anything we can help you with in terms of getting some of these tools started. Have a wonderful day.